It's Dionte from Journey to DevelopHer Podcast. If you don't know who I am, nice to meet you. I'm Dionte, real estate developer and investor in the New York and New Jersey market. And today we're going to have an amazing conversation with one of my good friends, Akeem Highland, who is a loan originator and he's a realtor as well. So he's going to be checking in a few minutes. We're going to be talking about how to buy real estate with low credit. I'm going to also give some pointers probably in the end of the conversation. But today, the focus is on him, what he does in his business, and what loan programs he has right now that you all can tap into, especially if you're in the New York and New Jersey, maybe Connecticut market. So we're going to clarify where he's actually giving money, where his company will fund your deals, right? So before we get started, make sure you're sharing this live with everyone that you know who wants to get a property in 2022, okay? Right now, despite the interest rates going up, we're going to tap in and talk about what's going on with the interest rates as well. Is it a good time to still buy or invest in real estate? I think actually it's the perfect time to invest. I have some victories and testimonies of my own when it comes to putting in offers right now. Right now, these sellers, they're not super crazy right now. That's what I'm going to say. They know what's going on right now when it comes to realistic numbers, okay? I was able to actually put in an offer about 50 below the asking price, and then the sellers countered at 40 below the asking price. Okay, so we're going to talk about that in a few later on in the conversation. But we have Akeem, so he's going to join the live shortly. And make sure y'all share this live. Let's see. Hello, share this live with everyone that you know, because Akeem's about to drop some
Hey,
bars. Hey, bro, what's going on?
oh man, it's been such a shift, but everything's been going pretty well. I think for the most part, we're keeping up with the times.
Good, good. So let everybody know who you are and where you're located. Uh-oh. Yeah, I can see you.
Yeah, okay, cool. Oh, so my name is Akeem. I'm a mortgage loan originator. Stationed out of Bayonne, New Jersey. We serve all of New Jersey, New York, Florida, and Pennsylvania at this time. I mean, we could do all 50 states, but those are my licenses right there.
Good. All right. I'm happy to hear that you're in Florida, you're in PA. I wasn't sure if you did Connecticut, but you said all 50 states. You can assist individuals with their loans. So that's good to know.
Yeah.
And you're also a realtor
Yes, I
as
also
well,
have
right?
a realtor hat too that I put on from time to time.
That's good. I mean, it's always good to keep the license just in case you want to make some extra money on a deal, right? So
Yeah.
good for you. So for those who don't know, this is Akeem Highland, the quarterback agent. He's with Nations Lending. And I've known him for the last, 4 years or so. And a couple of weeks ago, he texts my phone and he's telling me about his new programs, his loan programs, where you can actually fund your deals with low credit. Okay. At this point, we all should have a decent credit score, but we do
hmm
understand, things has happened over COVID.
Yeah.
So basically, Akeem basically told me that you can get your real estate properties funded. You can buy real estate with a credit score as low as 500.
Yes.
And my mouth was on the floor. Okay. So Hakeem, tell me about this loan program.
Yeah. So it applies to agency loans, which means FHA and VA. So FHA and VA, normal fixed rate loans. So we're not talking about construction loans. We're not talking about 2 or 3 Ks or anything like that. Those loans, you still need to be above a 620. Conventional, you still want to be above a 680. But if you're looking for a normal FHA loan for 30-year fix, you can get it with as low as 500 credit score.
Nice. Nice. So, all right, you're going to be looking at individuals' profiles, right? So,
Hmm.
what are you looking at to qualify them?
To qualify them, we're definitely going to look at the income. And it really does depend on the property, right? As far as individuals that we take into consideration. So if the property is a multifamily, let's say between 3 and 4, then it does have to pass the self-sufficiency test. For those who don't know, the self-sufficiency test is where we take the mortgage payment, where we take the rent roll and make sure that the mortgage payment doesn't exceed 3/4 of that rent roll. Okay, so if your rent roll is 4,000, your mortgage cannot exceed 3,000. Um, and that's for properties that are between 3 and 4 families. But between 1 and 2, we're really just looking at your income to make sure that you qualify because the ratios are still the same as far as qualifying for the loan.
Okay, that's fair. And what are why are these interest rates so high? Can you talk to us about that?
So, 2 weeks ago, the Fed had rose the interest rates because they were trying to fight inflation in the country. So as a response to fighting inflation and trying to get ahead of it, they really wanted to raise the interest rates to slow down the buying power of most of these buyers because people were getting bid out left and right and the market was way too aggressive. We've seen that the market had peaked in aggression when we dropped our interest rates down in the mid twos. And we've ticked up slowly since that drop, but then over the last 6 months, we've seen the interest rates jump up 3 points. Like in December, we were still in the threes, some people even in the twos, and now we're well into the sixes, and it's looking like we're going to be here for the next 6 to 18 months, something between there.
Now, do you think this is a pro or a con for our borrowers?
Um, I think that it's a con because your buying power has dwindled, but I do think it's a pro because the housing market has dropped. So now it's one of those things where it's a double-edged sword because you can't expect only the good. When we had only the good as far as like interest rates and before housing prices started skyrocketing, those people really took advantage of it. And it's like one of those things where if you can't time the market, you're going to get timed out of the market. So we need to be able to take the market for what it is and look at the silver lining. Now you can get seller concessions. Like people aren't talking about getting a seller concession in order to buy down your points. You don't have to have a 6% interest rate. You can buy down your points with a seller concession. FHA allows for 6% as a seller concession. If you have an eager seller and the place is appraising for that amount, I mean, these are unicorn deals, obviously, but you can do it. You can have 3, 5, 6% of the purchase price go towards buying down your points and getting you a lower interest rate. And
Wow.
and it's going to happen more and more now because of the amount of borrowers who got priced out.
No, I'm glad you over here. First of all, everybody share this with like 10 people right now. Hakeem is saying that although the interest rates are 6% plus, you can get the seller, if they're motivated, we'll say,
Mhm.
to give you a seller's concession up to 6%, and then you could use that money to buy down your interest rate. So if they do give you 6%, you can actually buy it down to about 0% interest. Is that what you're saying?
No, it wouldn't go down
No.
that much,
Oh,
but I
okay.
think you can definitely buy down 1%, maybe even 2%.
Right.
You
I've
know,
seen, like, you know what, in the past, I've seen, and I think Naka does this too, where it's a good, maybe like you said, 2%,
mhm.
you could buy down to lower it. So it's all about working with great realtors, working with great lenders who can actually put the plays together so you
Yeah.
can get these interest rates down. Um, so I do see it as a double-edged sword as well. I was telling those who were in here in the beginning that me putting in deals as an investor right now is great. Okay. And I'm lowballing people because I'm like, look at here, that your numbers are inflated. Okay. It was always
Yeah.
inflated, but now more than ever it's inflated. And we're talking about the changes that has been going on in the last month. Like this, all of these things just started happening within the last month or so. So I actually put in an offer, 55,000 below,
Wow.
asking for an off-market property. And they was like, no, we're only willing to go down 15,000. And this was on Friday. Yesterday, they contacted me and they said, well, we can't take the 230, but can you offer 240? So we're talking about 45,000 below asking.
Yeah.
And I said, absolutely. I will absolutely take that deal. It's a
Yeah.
no-brainer. So yes, you do have more wiggle room. There's more negotiation. These sellers know that there's about to be a correction. Even if it's not a major correction, they know they can't swindle us like they was doing before. Like, it's not going down.
Right. And it's one of those things where the market is going to soften as far as the aggression of people putting in offers, but the comps are the comps, right? So when we had 2 years of people bidding 40 or $50,000 over asking, that is the new price. So when we say a market correction, we're saying that it's not going to be as many people coming in 10% or 15% over asking like they were in the prior years. So now you can see a house on the market. Let's say if the house is 450, you could offer 450. You may actually get the home. Whereas 6 months ago, that was just the starting point. Like if you came in at asking price, you might as well have not come in at all. And now we're going to start to see the market go back to where it makes more sense as a buyer for you to have that ability to come in at asking price, and the appraisals are going to even the appraisal may still come in higher. And that is what you want. You want the appraisals to come in higher because if you're okay with a slightly higher mortgage, that's how you're going to be able to get those buy down points in that concession, because we can do a concession with an addendum without the seller losing any money at all. So this is how that will work. If the property is on the market for 300,000, and by the time you give your offer for 300,000 and it appraises for 310, you can take your loan up that extra $10,000 and use that as a concession under FHA, right? Because it goes up to 6%, and 10,000 out of 300,000 is only around 3%. So you can use that to buy down your rate if that's really what you wanted to do, or use it towards your closing costs, right? Keep more cash in your pocket. Have less people being able to uh, you know, take the cash out of your bank account. So the name of the game is to keep cash in your hand, right? Use the bank's money. This is how people are able to buy multiple properties, right? The more money from the bank you can get, that's the better off you're going to be. Equity is everything. So, make sure your deals make sense. And now we're in a place where people wanted to do the 4-3-2-1 strategy, and they were really itching to get into the market. And like now they're seeing that the prices may not be as competitive. This is probably the time for you to jump and do that.
I agree. And for those who came in late, Akeem told us about his loan program where you can purchase real estate as a homeowner with a 500 credit score, starting at a 500 credit score.
Starting at a 500 credit score. And I want to also make it perfectly clear. If your credit score is between 500 and 580, you're going to get the highest rate possible. And you may have to pay what's called discount points, which means you have to pay the bank to take your loan because you're a super high risk loan. But if it makes sense for you to get that loan at that interest rate, remember, rates are not permanent. You can always refinance. You can always improve your home, increase the equity, and refinance to get cash out. You have to look at it as this is your acquisition strategy. This is how you're going to acquire the property because this is where you are today. But if you're here today and you know that this house is not going to be there 4 months from now when you fix your credit, jump on it now because we can refinance you next year. And that's pretty much where we are. And the reason why we keep bringing up points and buying down rates is because when you do have that low credit and you see those points, sometimes it's 1%, sometimes it's 2%, right? And that's on top of your closing costs. So you have to pay to play. Like you do get the loan. You do get the loan with a really low credit, but it's not free. And we want to be real transparent with you from jump. It's not like you're going to come in here with a 520 and get the best rate. It's not going to happen. But you can get in the market if you're eager enough to get into it right now.
Right. And I'm glad you brought that up. Because you might just find an amazing deal, especially from these cities, Newark, East Orange, Irvington. They may have like a city owned property that they just rehabbed. Maybe you're a Section 8 tenant and you're now having your voucher converted over to a FHA mortgage or whatever the case may be. Or maybe
Mhm.
you're just like getting started and they're selling the house for really, really cheap, right?
Yeah.
It would be a no-brainer to go
Yeah.
ahead and jump on that opportunity. I know someone at the beginning of the pandemic. He was able to buy a house from a nonprofit in Newark for $280,000. The house was worth $450 at the time of the purchase, but he was able to buy it for $280. So if you come across a deal like that right now and it's a two-family like his was, you better jump on it
Yeah,
by any
exactly.
means necessary. However, that may, your super low credit may disqualify you from down payment assistance, unless Akeem knows of some that I don't know about. I think for down payment assistance, you should be in that 580 to and higher range, right? Or is it 620 and higher?
Yeah, so some products they do start at 580. But down payment assistance, there's a lot of variables when it comes to that. One of the biggest variables that people often miss is the income variable, right? They do have income limits. So, for example, I have a client right now whose household income is almost $200,000. Uh, they have all the money that they need to close, and they're still looking for some kind of down payment assistance. It doesn't work like that. Like the
Right.
products are made to go towards low to moderate income housing. That's what it's designed for. So you basically need to like basically down payment assistance. It comes off as a second loan, right? It's a forgivable loan. Some people call it a grant because you don't have to pay it back. It doesn't have interest or anything, but that's how you have to see it because it takes a number two position to the property. So your first lien is your actual mortgage, and your second lien is a down payment. And then there's certain stipulations, like as far as you staying in the property for a certain amount of time, making your on time payments. Those are the things that will make that loan get forgiven. But yeah, for down payment assistance, you definitely want to have your credit in order because you in reality is applying for two loans.
Okay.
Okay.
Someone does have a question. Christian, the lender,
Mhm.
he said, can you use a seller concession to pay for points? What's the max concession on FHA or conventional?
Mhm.
So Akeem
Okay.
did answer this earlier, I believe, but we'll run that back. So answer that question for him.
Sure. So a seller concession, the max for FHA is 6%. Max for conventional is 3%. You can, in a sense, use the concession to buy down points. And the reason why we say that is because if you come into the table already having the cash for your down payment and already having the cash for your closing costs, that cash is just going to be moved towards your points, and then the concession will be moved towards your closing costs. Okay, so that's what we're talking about when we say you're going to use your concession to buy down points, right? So we've done this before. Like I've had a deal before where uh, we had a 6% concession. It was almost $30,000 because they were really trying to find a way to make it work because it was a high cost deal, right? Because the credit was not good enough, so we had to charge points, and they were trying to buy a $1 million home, and the seller, was riding that wave of inflation and thinking he's going to get well above market, and he said, "Well, I'll give them 40,000 because I'm still going to come up with extra 60." But it ended up not working out. But it's definitely a strategy that you can use for sure.
So I had a question earlier and I forgot, and it came back when we talked about points. You mentioned
Hmm.
that there may be some type of penalty points if the person has a super low credit score, like that 500 score we were talking about. Can you talk about how many points typically they would charge?
So it's not exactly penalty points. It's really just one of those things where because you have a high risk loan, the
Hmm.
bank like our all right. So let me dial back. When you are going to get a loan, there's only so high the bank can charge you as far as what's our on par, which means like what's our rate for someone with good credit or fair credit versus someone that has bad credit. So there's not that much of a margin between our par number and the bad credit number. Now that we have to charge you the bad credit number, there are going to be points associated with that, meaning there's a fee because you're a higher risk loan. It can typically be uh, maybe 1%. It could even go as far as 2%. So,
Okay.
but it's not going to be anything where it's like 5 or 10% just because you have bad credit. No, but maybe if the house is 400,000, you may have to pay an extra 4 grand,
Okay.
or extra 8 grand. But like I said, the best way to use that strategy is to see if you can get some kind of concession, or if you have the cash. If you're someone that's, oh, I want to use cash for everything, and your credit is not great, but you really want to get this house and it's worth an extra $5,000, then buy the house. So that's how it will work.
So I do have some more questions.
Sure.
They're hitting my brain.
All right.
So this 500 credit score, I'm assuming it should not have any judgments. It shouldn't have any bankruptcies. What shouldn't it have for us to be
So
qualified?
that's a good question. So because it's an FHA loan, you still have the same requirements, right? So no, you shouldn't have any collections or judgments, and bankruptcies, or your foreclosure shouldn't be within the last 3 years. So those things are agency specific. Those are going towards all FHA loans. The FHA requirements itself didn't really change too much. Just the floor, as far as the credit score, that is what dropped down to 500 instead of the 580 that it was at before. So you still want to get all those things removed off your credit, and maybe in the midst of you removing those things, your credit score may increase. So one thing we have that we offer clients is a rapid rescore. So we're able to say, hey, if you pay down this, or if you get rid of this collection, then your score will jump to this number. And that's what we were using a lot of times before, when the floor was at 580 and someone was maybe at like a 550. We'll do a rapid rescore, see how we can help them increase their credit to get the FICO. Because remember, it's not all three. It's not all three credit bureaus. It's just your FICO, which is your middle score, had to be above 580. So we would do a rapid rescore, see which middle score we can get over the 580, and then be like, hey, this is what you need to do. You need to pay down this debt. You need to remove this judgment, get rid of this collection. And then with the rapid rescore, we were able to jump your score in like 10 days. So it was definitely a tool that we used a lot. We still use it now. Like I have 2 clients now that's paying down their debts, even with the news of the new score being at 500. They're still like, well, you know what? I want to fix my credit anyway. So they're paying down their debts. They're getting the collections off of there, and that's how we're able to make sure that they're going to qualify, even with the lower score, like they would qualify regardless.
Now, what I do know is, of course, and everyone should know this too, but there is a difference between like a mortgage score, correct? In most lending institutions,
A
of
mortgage
course,
score?
like I've heard, of course, we can't use Credit Karma as a source at all.
Right.
But sometimes, when you even go to buy a car and you go to buy a house, aren't the, what do you call that, Vanguard score? I don't know right now. But
Oh,
aren't the
yes.
scores different, or the way you calculate the score is different?
The scores come different because of how you pull it, right? So if you're pulling it with a soft pull, like from Credit Karma or something like that, they're doing estimates based off of your payment history and the things on your credit. But what we do is an actual hard pull, is a hard inquiry, and we get to see the credit in great detail. And that's what's going to give us the actual Equifax, Experian, and TransUnion scores. And then we use the middle score, which is your FICO, to qualify you for the loan. Um, there's other sites like freecreditreport.com that will give you the actual score for a good inquiry, but I think a lot of times more lenders are moving towards using soft pulls on credit. Like you're starting to see that happen more and more. Like even with us, like when you initially apply, there's a soft pull that doesn't affect your credit score. That kind of gives us I would say like a snapshot of the applicant before we go and pull your credit. So it's kind of like if I see your credit is really bad and I know that your income is not going to qualify, I wouldn't even pull your credit because I don't want to hurt you just to tell you no. You
Right.
know, so.
So let's run it back again.
hmm
Someone from this live contacts you. They're like, I want to start looking at houses.
Sure.
They need to get a pre-approval from you. What are the
hmm
documents that you're going to need to give them their pre-approval
So
letter?
for me, I think I tackle my pre-approvals a little differently from most lenders. Like a lot of times, you see people just try to give you the most money you can get, And I take a slightly different approach. I ask you, like, what are you paying in rent now? How much do you want to spend monthly? Because that is what's going to determine what you're comfortable with. Like, if you only want to spend $2,000 a month, all right, so we're not looking at $500,000 houses. We probably won't even be looking at $300,000 houses. We have to see what kind of property you want, and then how much money you want to allocate towards the deal. If you don't have $20,000, all right, so now we've seen that we have to be looking at $250,000 because you need to have your cash for your down payment and your cash for your closing costs. So I look at the property type, the assets you want to allocate towards it, and then I look at your income versus your liabilities, meaning the things that's going to be on your credit. And the way we do that is when you apply, obviously you want to give us an ID. You want to give us 2 years of your W-2 if you're an employee. If you're self-employed, we need the tax returns. And then 1 month of pay stubs, so that could be 2 or 4, and 2 months of bank statements. And that's typically what we're going to use to start to iron out your 1003, which is a mortgage application. And that's what we're going to use to try to get you pre-approved for the house that will fit your lifestyle the best, right? And we'll also talk about your real estate goals. Do you want to be a landlord? Do you want to buy multiple houses? Is this going to be your dream home? You know, those are the conversations that I have with buyers because that's what's going to let you know what you should get rather than what you could get, you know?
No, that's awesome. Okay. Does anybody have any questions for Akeem? Because, I don't want to be the only person with questions. And I can't be a moderator to decide which y'all want to ask. But, Akeem, you're definitely sharing a lot of great information, so I appreciate this. The other question I would ask is, let's see, what strategies do you recommend? Because you're a realtor too, you got to tap into his all of his abilities on this line.
My real estate side, yeah.
Right. What strategies do you have for people to find good deals right now? Even though it's like we said earlier, they're coming a little better. There's more negotiations that we can, offer. So what are some strategies? What do you recommend?
So this is what I've been seeing or what I've been implementing in the last few months. So basically, I use the open house strategy. And I think a lot of people don't really implement that, right? So the open house strategy is when you have an open house on a certain block, only one person can buy that property. So now you have a whole bunch of other buyers that are coming in to look at that property. But the way you get the off-market deals is you don't want your open houses to be tailored towards buyers. I think a lot of times the realtors say, oh, I just want buyers, I want buyers. You should be, as a realtor, want your open houses to get those nosy neighbors in there. And telling them, like, hey, I just had somebody leave. If you were considering a cash offer, what would be your number? So for me, when I do open house with a realtor, I go around probably like a few days before or even like a few hours before, and I knock on the doors around the neighborhood. Hey, just wanted to introduce myself. I'm a lender. I'm a realtor. We're having an open house at, whatever the address is, 123 Main Street. We would love it if you can stop by, check us out. Invite those homeowners there because they may be thinking about selling too. And once they see what you're going to get for that property, then you got an off-market deal because you can say, hey, listen, I can sell your house and let you close 60 days from now to give you some time to move or give you some time to find something else. Or I can start helping you look at houses right now. And if you find something better than your house, then I have buyers that will buy this house from you without us even having to put it on the market. You really have to be one of those people who control your database. That's how you find the off-market deals. Like if you talk to someone once and you never talk to them again, this business is going to be very hard for you. You need to be able to have a way to capture these data and log all the conversations that you're having, whether it's with a buyer or someone who wants to sell. And those are the ways we find off-market deals. Probably every other weekend we get a seller who's interested in selling also, and they just haven't listed it yet. So,
oh, that's awesome. Thanks for that recommendation. And what are your thoughts on short sale leads right now?
Short sales, I don't see them coming in an abundance. Short sales, me? Oh, turn on the lights? Oh, okay, yeah, that's fine. Yeah, so I don't see short sales or foreclosures coming in abundance. And the reason why is because the market is so aggressive that if you are behind in your payments, but instead of you getting a short foreclosure on your credit, your best bet is to sell. You can sell in 30 days. How are you losing your house when everyone wants your house? You know, like how are you short selling when your value of your property is higher than what you owe? Those scenarios don't work right now. You know what I mean? So anyone who is behind in mortgage payments and they feel like they're in pre-foreclosure, because you don't just go from mortgage to foreclosure. There's a time between it. Like you get served a pre-foreclosure notice, you get put on notice that you're about to foreclose. It's not like the bank just comes on random day and locks you out of your home. That's not
Right.
how it works. So if you are in a position where you got pre-foreclosed, you got that letter, the LES letter, LAS, and you see, all right, I'm about to foreclose. Can I get this money or can I sell? You know, and sometimes if you do have the credit, you can refinance and get that money out of the house to pay down that back payment. You know, sometimes you got to start over, put a few more years on your mortgage in order to get back on track, or maybe get a lower payment, or sell. Do you know what I mean? So the short sale, I don't see that happening as often. Foreclosures, I don't see a wave of that coming either, as long as the market stays the way it is. No one wants to have a foreclosure on their credit, and no one wants to get put out of their home. You know, so for me, if I was a realtor chasing leads, and there is some kind of magical list of people in pre-foreclosure, you need to be offering your services to help them and say, hey, can I sell your house in 15 days? Can I sell your house in the next 30 days and help you get out of this pre-foreclosure? Because the market is too aggressive for you to lose your home right now. It's too many buyers for people to not find buyers before they lose their house.
I agree 1,000%, and it's a no-brainer, especially when you can have a cash buyer go in and relieve them of that, or
Mm-hmm.
even go through a regular traditional sale. You could always ask a bank for an extension or whatever the case may be. But get
Exactly.
that house sold and get it off of your hands. Any other loan programs that you guys offer at Nation Lending? What is it? Nations Lending, right?
Yeah, Nations
Okay,
Lending. That's
making sure.
that's where I'm at right now.
Yeah.
Other loan programs. I mean, we have DSCR, which means it's a investment loan that takes the rental role and uses that as a way to qualify you for the property. So basically, what it is similar to the sufficiency test, very very similar to that, where we're going to say, okay, does the rent roll, or does your mortgage, is your rent roll over three-fourths of the mortgage? Yes, that's how you say it. All right, so so that's how we're able to do those kind of loans. Um, we have bank statement loans, asset loans, products that go with different people's scenarios. If you're an entrepreneur and you want to use bank statement loans, then we have those too. You just have to have really good credit, right? Like there's always a catch. Like you need to ask these lenders, all right, what's the catch? Because we can say, oh, we have down payment assistance for everybody. What's the catch? Oh, you got to be 85% of the median income. There's always something. So make sure you do your research.
And for those
Um,
who are looking for investment loans, I do offer those.
yeah.
And you can have lower credit. You don't have to have a 680. I think the lowest I go is a 600. So if anyone on here, again, we're focusing on lower credit because sometimes people just got issues with their credit. Of
Mm-hmm.
course, we encourage you all to build your credit, but in the event that that's not your story or your testimony,
So someone.
we're bringing solutions. So Jasmine, who's another bombshell investor,
Mm-hmm.
she wants to know if you do loans in Puerto Rico or internationally, Jamaica, Trinidad. That is a good question, Jasmine.
That is a great question. I haven't done it yet, but I'm pretty sure I can. you know, I don't see like especially with
Especially Puerto Rico,
Puerto
right?
Rico. Yeah,
Yeah.
like they have U.S. currency in their United States territory, so I think we should be able to loan to Puerto Rico for sure.
St. Thomas, Actually, I have a deal. Someone brought me in St. Thomas that they need funding for. So find out if you can also do St. Thomas because they do also
Yeah.
have U.S. currency.
Oh, good.
Yeah. So
So for you as an investor, like what strategies are you using to find your deals?
to be honest with you, I do have an investment team. So, and of course, I'm coaching some individuals on wholesaling and investing. So, pretty
Mhm.
much, and anybody that's listening, if you have anyone that you know that's in jeopardy of losing their house or they just want to get that house off their hands, I will be paying you guys referral fees up to $5,000. Okay, so we're talking about easy, quick money if you know people that are looking to sell their house.
Mhm.
I am working with other wholesalers, okay, the ones that really do put in the marketing campaigns, and I'm just going directly to them because they already did all the dirty work for me.
Mhm.
I am using realtors, of course. Um, if there's any out there that have deals, shoot them my way. I'm looking on our HUD websites to see what's out there. Those websites, those REO websites, are very limited right now. But I am networking with those realtors because you never know. They may have a pocket listing
Mhm.
that they want to just shoot me over real quick without putting it on the market.
Yeah.
I'm the girl for those. So I'm doing a lot of networking to see what people have, letting them know that I exist, letting them know that I can get deals closed quickly, no hassle, no BS. Um, so MLS, Jasmine said she's finding deals in MLS. I must say, a guy that I know in PA, he's finding a lot of deals on the MLS, and
Mhm.
he's also offering below market, and they're circling back after a week, and
Wow.
they're accepting his low ball offers. So again, the markets are changing. But if you're a first time investor, realtor, whoever, you definitely have to use the leverage of marketing with these wholesalers, with these investors or realtors, mortgage loan originators, title companies, because a lot of deals right now are falling, collapsing right before
Mhm.
the closing table. And they will need someone to come and save the deal, right? And close quickly. So
Yeah.
this is your season, buyers. Any way you look at it, this is your season. Was that
Yeah.
you that told me that you have a program where they could put in a cash offer with a mortgage loan?
Um. No, but
Okay.
I know a guy who does have it. I don't have that, or at least I no, I don't think I have that. But I
Okay.
know what you're talking about. Like there's actually he's a friend of mine who has it. His name is Method Mortgage. His name is Sean. He has that product. He works at Fannie Mae.
Okay. Right.
Um,
I knew it was
yeah,
one of those. I wasn't sure if it was you, but I know, as you know, I have great relationships with different lenders and, just incredible
yeah.
stuff.
So you know
So
Sean too?
I'm not sure if I know Sean, but I know another guy, the guy that does my development
Hmm.
loans. He also offers that program as well.
Oh, okay. Yeah, they do that. Basically, so what the program does, from my understanding, is you're able to put in a cash offer, and then once they fund it as a cash offer, they go ahead and give you a loan. So it's kind of like you're refinancing into a mortgage after you get the hard money or cash at first. So it
Mm,
makes you a more attractive buyer. They developed that program because so many people were getting outbid by cash offers. So
exactly. Yeah.
yeah.
Um, Let me see. I think I asked everything. I don't know if anyone else has any other questions. Um, if not, cool. This was great. Akeem, are you going to be at our Journey to Developer meetup and mastermind that we're putting together July 23rd? Are you going to attend?
Oh, I'm definitely going to attend. I'm definitely
Awesome.
going to
So
attend. I'll be in the building.
cool. I know Jasmine is going to be there.
Okay.
I'm going to be getting some marketing promo, God willing, next week. We are looking for sponsors, and mainly because we want to keep the event as affordable as possible. Okay, so I'm just warning y'all. If I don't get no sponsors, y'all gonna have to pay to come. But no, we are gonna have a meetup where you'll be able to network, and then we are gonna have a mastermind as well, where you'll be able to learn and actually network with the speakers directly, and it's gonna be fun. So make sure you stay connected, turn on your notifications for my page for the podcast. We actually have like 6 podcasts we're going to release before the event, and it's actually going to be like a podcast live. So The only people that's really going to be able to get access to it is the people that's going to be there, right? And this is in
Yeah.
celebration of our 2-year anniversary. So Journey to Developer turns 2.
Nice.
All right. We have now also elevated to becoming a nonprofit. So we have a lot of amazing initiatives that we want to start. We want to give back to the community. We want to make sure the information is given to you as we've been doing this whole time. Myself and all of the guests that has been coming on the show, we've been pouring and sharing. But we want to continue to do that and also give back to initiatives that are near and dear to my heart, such as domestic violence, sex trafficking organizations. So it's going to be great. Y'all know I'm a Jesus lover, so we have some components of that as well. So it's just going to be great. So you don't want to miss out what's coming. So make sure you subscribe to the Journey to DevelopHer podcast on YouTube. The link is in the bio. Make sure you go follow the page. Make sure you stay connected with Akeem as well.
Yeah, you can give me a follow. I was just looking at the question someone had asked. What's the name of the program? I guess they were talking about the cash program, the cash buy-in program. I don't really know the real name, but I dropped my guy Sean Instagram in the chat here, so you can go check him out. He works at Fannie Mae. He's a dope guy. Definitely gonna help you out and do right by you. And you can even tell him that I sent you too. Yeah, he'll answer all your questions about that product.
And I was gonna say Jess was super late, so she probably had a question about the 500 credit score program, maybe too.
Okay.
So one sentence. Go ahead.
So basically what we're seeing is that the FHA has dropped down the credit requirements to 500. So we have the same exact requirements that you would as an FHA. It's just that if your credit score is below a 580, between 580 and 500, you're now eligible to get an FHA score, but you will have to pay points as far as additional closing costs. That's the spiel with that one. And someone asked, any advice for current renters who are looking to buy for the first time? The advice I would give a current renter is to call me. No, I'm just kidding. No, seriously, like if you're renting a house, you want to buy for the first time, you're a first time home buyer, the first thing you want to do is contact your mortgage professional. Let's talk about your finances. Let's see how much we can get you qualified for. Let's look at the market that you're looking to buy in. And then, see that it's something that you can afford to do. And then we'll pair you up with a realtor and they'll go out and, you can shop around. But honestly, what you want to do, for any advice I would give a renter, is finding out the payment shock, right? Because most times you're going to spend more on a mortgage than you are on rent. So what you want to do is, if you want to buy a home for, let's say $350. So you can go to any mortgage calculator, Google mortgage calculator, put in the price, put in your minimum down payment, which is 3.5%. Go ahead and put in your taxes, let it generate the monthly payment, and then give yourself a couple of months of hitting that monthly payment. And what you want to do is take what your rent is and make the difference between your rent and that monthly payment, put that in a savings account. And that'll help you start saving up towards your first down payment and your closing costs. But now you're already in the swing of making that monthly payment for the last 4 or 5 months, or do it up until you close. So that way that payment shock doesn't hurt you because you're already adjusted to that lifestyle, right? So that'll be the advice I give to any first time home buyer, is definitely become comfortable with the payments that you're about to sign up for. Because that's why so many people foreclose. Everything sounds good, and you assume that you can make that extra $600 a month, but if you're not adjusting your lifestyle to that, then it just becomes tight and difficult, and now you're looking at ways to increase your income. So I would say practice first. Like that's my advice.
Sound advice. And the great part about FHA, as you all may know, of course, they do have down payment assistance programs, but they also have a home buyers course that is mandatory that you have to take. And during that course, they do teach you about money and budgeting and being a homeowner. And I think that's just so vital. Like, I don't know what people think they're getting into. But that
Hmm.
8-hour course does really lay out exactly what they're going to be getting into. Everything.
Yeah, yeah, and those courses are definitely mandatory if you're going to get down payment assistance. Like, you have to do it for
I think
down
it should
payment
be mandatory for
assistance.
everybody, to be
I
honest.
think I think so in a way.
Yeah, like anybody that's
You
getting a
know?
mortgage has to get it. I will say Journey to Developer will be providing those classes in the near future.
Oh, nice.
Um, and that's been, I know me and Hakeem talk behind the scenes all the time. So that's like a 3 years in the making type of thing. I'm actually, I hate to say this, I got to toot my own horn. I'm the one that encouraged him to go get his mortgage license and then never got mine. But
Correct, correct. It's such a weird thing, right? So people always ask me like, "Why'd you get into mortgage? Why'd you get into mortgage?" And I'm just like, "Oh man, I just didn't want to get boggled down to New York." But I remember that day very, very well, and I'll tell the story real fast. So Dionte hit me up and was like, "Hey, there's a lunch and learn in Long Island. Do you want to go to it? This guy named Matt is holding it." So I was like, okay, like, yeah, let's go. We used to always talk about investing and like her starting a podcast, her starting her developer academy, her doing development deals and buying properties all across the country. And like, she was one of the first people that taught me how to invest or think about buying properties and stop being an agent. Right. So when we went to that lunch and learn, we had met with the lender there, and we were talking about starting a team and doing these things for the community, and trying to educate people of color with financial literacy. And I loved it, and I was like, you know what, I'm gonna get my license. So I literally met this guy in December, passed my course in January, and then took my first test in February.
I
Like, I was like sold. Like, I was like, I'm here. And as we all know, the pandemic hit in March. So
yeah.
it was a one hell of a time to try to jump into mortgages, but I'm glad I did. I've learned an amazing amount of information in a very short amount of time, so it was definitely a good decision.
Yeah, I'm happy you're thriving. And it's only more to come. Like this, we just getting started. I feel like this is my season to like really do a lot. Okay.
Yeah.
And same for you. You're gonna definitely be greatly blessed during this upcoming year, the next wave of what's happening. I do feel like a lot of millionaires will be made over this next stretch.
Mhm.
There will be a wealth transfer, so everybody got to get prepared and get in line. Like I had to say yesterday on my coaching call, scared money don't make no money. So stop acting scary,
Yeah.
get in the right rooms, get on the phone with the right people. If y'all have any questions for me directly, you can DM me, of course. I'm always sharing and pouring. And again, if you have any properties, let me know too. If you have any land, let me know. I am paying referral fees. And July 23rd, we're in the building in Newark, New Jersey. Just a rundown. I don't know, depending on if you're going to be in a mastermind or not, we are going to be talking about a lot of the information we just spoke about today. First-time home buyer programs, development programs as well, how to build your first ground-up construction project through
Mhm.
FHA, actually. That lender is going to be in the building. We're also going to be talking about how to even wholesale, because, that's how I started. How to wholesale development deals, how to wholesale land deals, how to find properties. We will be talking about any and everything that I stand for. Credit too. So you want to get in a room with the right people. A lot of you may or may not know my story. I started in this business with no money, really bad credit, didn't have a car. Okay. So, and even during the pandemic, I had to rebuild myself. A lot of y'all don't know that. So with that being said, now I still have my assets, but I had to rebuild my team, right? I had to put things back in perspective. So one thing I will say, by the grace of God, if I was able to do it the first time, I could definitely do it again.
Mhm.
And we showing all of y'all how to do it as well. So y'all need to be there. All right. So y'all be blessed. Thank you, Hakeem. I appreciate you.
Yes, thank you. Hopefully, we can save this live, and
Yes, I
I
am going
definitely want
to
to
do it.
save it and send it to me, please.
Yes, I got you.
All right. Thank you,
I
guys.
got you.
Have a good day. Have a good rest of your day.
All righty. Bye.